Hello and welcome. My name is Luis Cortain, and today I'll be walking you through a strategic analysis of FedEx Corporation. I'll be covering its environment, its competitive position, and recommendations for the future. Let's begin with an industry overview. FedEx operates within the global courier, express, and parcel delivery industry, a fast-growing, capital-intensive sector driven by e-commerce and globalization, and valued at around $460 to $480 billion in 2023. The industry is dominated by FedEx, UPS, and DHL, known as the Big Three, which together manage extensive air and ground networks across over 220 countries. While DHL leads international express volume, FedEx maintains a strong position alongside UPS. The rising competition from Amazon logistics arm poses a growing threat as well. The industry serves both business to business and business to consumer segments, requiring scale, speed, and a global reach to maintain competitiveness. Key industry trends. The logistics industry is undergoing major shifts driven by e-commerce growth, digital innovation, sustainability pressures, and regulatory changes, all which significantly impact FedEx external environment. Surging global e-commerce is increasing demand for fast, flexible deliveries, pushing FedEx to expand capacity and enhance its last mile solutions. Meanwhile, digital technologies like AI, automation, and robotics are transforming operations in all the industries, with FedEx investing in smart logistics to stay competitive. Sustainability is becoming both a compliance requirement and a market differentiator, promoting FedEx to pursue carbon neutral operations by 2040. Additionally, evolving regulations on emissions, labor models, and global trade demand operation agility. These trends present both a growth opportunity and strategic challenges for FedEx in a dynamic tech and policy-driven industry. FedEx operates in an intensely competitive logistic landscape, which is dominated by UPS, DHL, and Amazon Logistics, alongside postal services and regional carriers. UPS is its main US rival, which boasts an integrated delivery network and a higher profit margin than FedEx, while DHL leads in international and express with deep global coverage. Amazon has emerged as a disruptive force, surpassing FedEx in US parcel volume by leveraging its vast e-commerce infrastructure. Despite these pressures, FedEx stands out through its global scale, speed, and technological innovation, particularly in its express delivery and tracking systems. To maintain its edge, FedEx is unifying operations under the One FedEx model and must continue to prioritize service and quality, customer experience, and operational efficiencies amid rising competition. I will be using Porter's 5 Force framework to evaluate the attractiveness of the courier, express, and parcel industry and the pressures that FedEx faces. The industry is characterized by intense rivalry, with companies competing primarily through pricing strategies, service differentiation, and technological innovation. Large corporate clients often leverage this competitive environment by negotiating lower shipping rates, which increases price-based competition amongst providers. It is cutthroat industry when it comes to pricing. The threat of new entrants is moderate at the regional level, but significant barriers such as high capital investments and infrastructure requirements limit the threat globally. Notably, though, Amazon has disrupted the space by using its vast capital resources to build a proprietary logistic network. Customer bargaining power varies with client size. Individual customers and small businesses typically have low bargaining power, whereas large commercial clients can negotiate favorable rates. FedEx depends on various key suppliers, which include aircraft and vehicle manufacturers, fuel providers, and labor market suppliers, with these suppliers varying across the with supplier power varying across the categories. And lastly, the threat of substitute remains relatively low, as there are few alternatives to physical delivery. However, options like self-delivery, for example, Amazon's in-house logistics, and digitalization such as electronic documents and signatures present a moderate risk. While these substitutes do not fully match FedEx speed and reliability, they still exert downward pressure on demand. Internal environment. FedEx mission ties service excellence directly to shareholder returns and the integration of digital/physical networks. FedEx focuses on blending technology with its physical delivery, giving great customer service, building strong relationships with employees and partners, and always acting with integrity. Their culture emphasizes the Purple Promise, which means making every FedEx experience outstanding. They also make it clear that safety comes first. What's interesting is how they connect top-notch service to financial success. Basically, they say that if they take care of their people and customers, the profits will follow. That's part of what they call their People Service Profit or PSP philosophy, which came straight from their founder, Frederick W. Smith. FedEx organizational structure historically has been distinctive, but has been going through recent evolutions. For most of its history, FedEx Corporation functioned as a holding company overseeing a portfolio of independent operating units, each focused on specific segments of the business, but all under the FedEx brand umbrella. However, recently, big changes have been occurring, and the integration of Express and Ground into one FedEx is aiming for speed and efficiency improvements along with better financial performance. This is a key evolution for FedEx. FedEx has achieved solid revenue growth over the last 5 years, with annual revenue rising approximately 69.2 billion in FY 2020 to 87.6 billion in FY 24. This represents an increase of about 21%. Despite this growth, profitability has been more volatile. Net income ranged from a low of 1.2 billion in FY 2020 to 4.3 billion in FY 24, with a record 5.2 billion in FY 21 due to COVID-19 driven surge in demand, which created capacity shortages in the industry and allowed for higher yield per packages, a key indice in the industry. Capital expenditures have also trended downward as a percentage of revenue, from 6.7 billion or 7.2% of revenue in FY 22 to 6.1 billion in FY 23, and then 5.1 billion or 5.9% of revenue in FY 24. This was a major achievement and a key strategic goal of reducing capital expenditures below 6.5 for FedEx. Demonstrating financial discipline, FedEx returned approximately 4 billion to its shareholders in FY 2024. The company has also maintained a solid balance sheet. Although debt increased slightly following the TNT acquisition, FedEx steadily reduced its leverage, with a debt-to-equity ratio of 0.73 as of February 28, 2025. Importantly, the company has retained its investment-grade credit ratings and continues to generate strong cash flows from its operations, especially during high-profit periods like 2021. SWOT analysis. FedEx key strengths lie in its vast global logistics network, strong brand reputation, diversified service offerings, cutting-edge technology, and large-scale financial capacity, all of which provide a strong foundation for reliable, high-quality service. However, the company faces internal challenges, which include a historically fragmented operating structure, a higher cost basis and lower margins than UPS, and vulnerabilities tied to its independent contractor model. Opportunity, Opportunities for growth include expanding e-commerce logistics, expanding its digital transformation, and international market penetration, and finding new revenue streams through specialized sectors like healthcare. Yet, FedEx must navigate significant threats such as intensifying competition, economic slowdowns, regulatory risk, and rising fuel and labor costs that could pressure profitability and market shares down. While FedEx pursues all these important innovations and improvements, it must keep its quality of service at a high level. FedEx core competencies such as its world-class express transportation, its advanced hub operations, and leading logistic IT systems form the backbone of its value chain, enabling fast, reliable, and visible delivery services globally. Its ability to manage complex last-mile logistics, supported by strong sales, marketing, and customer-focused tools like Delivery Manager and FedEx Insight, adds value and enhances customer loyalty. A key differentiator is FedEx Office, a company-owned retail network that boosts accessibility and fulfillment capacity. It sets it apart from UPS and DHL. Altogether, FedEx integrated capabilities across its value chain give it a competitive edge, though it is important that continued investment in efficiency and innovation will be critical to maintaining that advantage. FedEx pursues a broad differentiation strategy centered on speed, reliability, and premium services rather than competing on price. Targeting a wide range of customers with a strong brand built around time-critical logistics. This strategic choice drives continuous investments in innovation, quality control, and premium offerings, allowing FedEx to justify higher rates and maintain a competitive edge. Its growth has come from a disciplined mix of organic expansions, strategic acquisitions like the ones of RPS and TNT, and global partnerships in countries like India. All these are aligned with its core logistics focus. FedEx-related diversification strategy has enhanced its one-stop logistic capabilities, avoided distractions from unrelated sectors, and allowed it to maintain brand clarity and operational efficiency, all exemplified by its bold exit from the Amazon contract to protect long-term positioning. My strategic recommendations include that FedEx accelerate its digital and operational transformation with a strong focus on e-commerce sector. Also enhancing integration between its physical and digital networks to improve the last mile efficiency and meet the evolving customer expectations. These all align with FedEx mission and support key initiatives like the Drive and One FedEx, while also reinforcing its premium service positioning in a fast-changing market. By investing in advanced technologies, automation, and smart logistics, FedEx can future-proof its operations, sustain profitability, and solidify its leadership in global logistics for the next decade. In conclusion, I believe that FedEx is well positioned, but it must move fast to integrate, innovate, and defend against aggressive competitors. All these changes with its integration and improving of its infrastructure, IT capabilities, and automations must be balanced, and they must maintain service quality while transforming. This will be a key to their long-term success. Thank you. That is the end.